What's up, guys? Today we're going to discuss the secret credit inquiry rule. And you know what the biggest secret is? It's actually not a secret, but it's just so surprising to me. Actually, it's not surprising to me, but it's just so ironic how there are so many so-called credit repair experts out there that don't even know about this. And they're actually spreading misinformation about inquiries in general. Now, what do I mean? We've all heard about inquiries. There's soft inquiries and hard inquiries. If you don't know what credit inquiries are when you go to a bank to apply for a credit card, apply for a bank account, or even apply for a job at some jobs. When you go apply for a mortgage, to get an auto loan, even a cell phone, they're going to do a credit check, a background check, whatever it is. They have to consent to that check, and then you sign off on that paper, and they inquire to look at your credit report that is stored on the bureau's servers. Now, there's 3 credit bureaus: TransUnion, Equifax, and Experian. Now, what these data mines do is that they host data from various financial institutions about you that you have had contractual agreements with. Now, when you apply for credit at any one of these banks, auto loans, credit unions, mortgage banks, whatever it is, they have the right, as long as you sign off on that paper with your signature, to get a copy of your credit report. And then guess what? That inquiry gets stored on a reference and a documented on your file. Now, it's there to stay forever. Just kidding. No, for like 2 years. Then they fall off. Or you can dispute them in a way that you can legally get them off. Don't dispute them as fraud, because that's not right. If you actually applied for something, then you own their inquiry. However, there are disclosures that the creditors have to produce when you dispute that inquiry, and you have the right to contest its validity, its accuracy, and its up-to-dateness. Simple as that, and maybe a few other things. Now, here's the thing. It's just crazy how people in the credit repair industry are just so shady and just so brazen about what they do, and just so audacious and so stupid to even talk about this. There are people out here that are really just lying through their teeth. They don't even know this stuff. Case in point, check out this video right here. Watch it.
When I tell y'all, TikTok, YouTube, Instagram, and Facebook, there's so many so-called credit repair experts giving so much incorrect information. Just watch this one about hard inquiries.
How can I get hard inquiries off from a car lot or running it several times? Don't worry about it. If it was all run at the same time, it's only counting as a single inquiry. It's not hurting your score that much.
Trust me when I say this is one of the biggest lies. Same with a mortgage. If they run your credit 20 times, it does not count as one. Trust me, you're going to see all 20 hard inquiries on your credit report.
Okay, you heard him say it. Look how confident he is. His fat ass, ugly face, this fat ass, ugly guy. Look at this dude. How confident is he? He just thinks he knows it all. First of all, he's 100% wrong, and there is no excuse for getting this wrong. And actually, that video probably removed from internet because it's spreading misinformation. And here's the thing, it's one thing for me to say something is information, it's another thing to prove it. There's people that make bogus claims about me that I'm spreading misinformation, but they can't even prove it. They don't prove it the correct way. There's a right way to prove things, like with actual facts and citations from the government, and then there's people that interpret the law and misconstrue it all the time. These are what you call jailhouse lawyers, people that don't know anything about credit repair or the law in general, and they think that they can give you legal advice. Now, as a disclaimer, this isn't legal advice. I'm just pointing you in the direction of where the actual law is coming from, and I'm going to show you this right here. So, before we go into that, let me illustrate this point to you, very simple, and then I'll back it up with the facts. But I promise you, in this video, we will discuss the secret credit inquiry rule and why this guy doesn't know anything that he's talking about, and he is 100% a scam. Nonetheless, this particular person has a huge tendency to stalk our social media, harass our clients, and as you can see, these are the videos that were removed for pretty much the same thing: harassment, misinformation, and bullying, and stalking, and other violent stuff. This guy's very toxic. He has beef with nearly everyone in this industry that doesn't agree with him. Anyone that is doing credit repair, he views as a threat, and he'll just badmouth and talk bad about them. He gloats about his own self-proclaimed skills in credit repair when he has actually nothing to really back it up other than just what he says alone on his channel. He invites very questionable people that have no credentials whatsoever. This guy does not have a Trustpilot. This guy has no Best Company. This guy has no Google listing. This guy is actually located in Georgia. How could you live in Georgia, a place where credit repair is illegal, and claim to be an expert? So first of all, to do credit repair in your state is prohibited, but you claim to be a credit expert. How does that work? Where did this guy go? Did he actually live in other states? Actually, no. We found out some more information about him, and this guy has always lived in his mom's container. We did some more research on this person, and yeah, it's actually a shack. So guys, without further ado, let me explain this first, because I don't want to get toxic. These are all factual things. This is a fact. All this is fact. It's not my opinion. And we're going to back it up here. This is for you guys. In the realm of inquiries, there are a few ways. There's actually 3 ways you can inquire, probably a little bit more, but let's just talk about the basic ways. The basic ways for you to get inquiries on your credit report are if you apply for a credit card, okay? This is a credit card. I drew this earlier. Credit card right here. You apply for an auto loan. So let's write auto loan. That is a Ferrari, like the Ferrari from the 80s, all right? You know, the one like this? It's like kind of like that, has those little marks on it and those things. Ferrari Testarossa, the old one. The Ferrari that's in the Wolf of Wall Street, like that one, the iconic Ferrari Testarossa, okay? That's what came to mind. Here are the wheels. They're actually a little bit too big, but whatever. It's hard to draw this angle. And then here's this little simple house. White picket fence, little flower there, a tree, and just a simple door. You get the point, right? So you have a mortgage right here. Okay? Now, there are a set of rules that govern credit cards, auto loans, and mortgages. Mainly mortgages. There's something called the Dodd-Frank Act. Dodd-Frank, Fannie Mae, Freddie, okay? And then there is something called the TILA, the Truth in Lending Act. That's a big one because the TILA and the CFPB, which is the Consumer Financial Protection Bureau, the CFPB enforces TILA on regards to mortgages, and also the National Association of Realtors, okay? That pretty much handle the transactions between a seller and a buyer, and the agent of the buyer and the agent of the seller. And then there's escrow, the middleman, okay? So these are the things that facilitate this transaction right here, all right? And these are like the mortgage brokers, the real estate companies like Fidelity Realty, Inferno, all those guys, okay? I think Charles Schwab, maybe. Okay, but here, let me just talk about this document right here.
All right, guys, these are screenshots from the Consumer Financial Protection Bureau's website, and let's read it together. All right, does shopping around for a mortgage hurt my credit? No. Within a 4 to 5 day window, multiple credit checks from our mortgage lenders are recorded on your credit report as a single inquiry. This is because other lenders realize that you are going to buy one home You can shop around and get multiple pre-approvals and official loan estimates. The impact on your credit is the same no matter how many lenders you consult, as long as the credit check is within 45 days of the first credit check. Even if the lender needs to check your credit after a 45-day window is over, shopping around is usually still worth it. The effect of an additional inquiry is small, while shopping around for the best deal can save you a lot of money in the long run. Okay guys, so there you have it, and it's pretty much the same with the auto loan industry. Let me give you another example. Here is a screenshot from the website Genius Bank, and it cites articles from FICO about particularly Facta Beacon. All right, so let's read it. Each credit scoring module treats inquiries differently. The FICO model treats multiple inquiries for the same type of loan within a 14 to 45-day period as one inquiry. So you see where FICO model is highlighted? They're referencing Facta Beacon. In other words, that is FICO. It's now known as FICO 5. And I'll explain that later.
As we saw from the Consumer Financial Protection Bureau, there is a 45-day grace period. That's right, 45-day grace period. 45 days, okay? The grace period for mortgage inquiries, for multiple inquiries, is 45 days. Now, some are 30. I thought it was 2 weeks. You know, it really depends on, you know, the bank. Some banks could be different. And yeah, but that's new to date information from the CFPB. So let's just stick with that. Let's not stick with any old information. It's 45 days and it's just going to count as one inquiry. All right. It's not going to hurt your score because the government knows and credit bureaus know you're trying to get a home. You got to shop around. You have the right to shop, and these scores can't prevent you from shopping. You have your right to shop around. Now, for auto loans is a little bit different. They say it's 30 days. Some say it's 2 weeks, where if you apply multiple times within 30 days, it counts as one. If you apply multiple times within 2 weeks, it's one, okay? 14 days, 2 weeks. Depends upon what algorithm. Now, what are FICO algorithms? Because we know about FICO scores, but do we know about the FICO scores, like the algorithms? Well, let's talk about the main three algorithms, the godheads of them all, which are kind of becoming obsolete now. So the first one is Facta Beacon, all right? Facta Beacon. You got Facta Beacon. You got Trans Risk. Forgive my writing. You got Empirica. And you have FICO Classic. Okay, and then you have FICO 8, you have other ones, FICO 8, you got FICO Ultra, you got FICO, the most recent one, which is FICO T10, and you have Vantage. You know, let's put Vantage right here. Different versions of Vantage. FICO 10, FICO 10, I'm sorry about this, guys. FICO 10T, all right, that's a 10, I'm sorry. Make the one a little bit unique. 10T. Now this one is like holding weight right now. We'll talk about, I'll make a video about this. This one is pretty much in the spotlight. Actually, 20 of the biggest, largest retail banks are adopting the FICO 10T scoring model because it's just more robust. The FICO 10T is a byproduct of all these, actually. It's like this upgraded to the ultimate score that we know now. It's more accurate because there have been tests to prove that this score is actually showing that it's accurate because many months ago, they were using other scoring systems such as FICO 8, Ultra, etc. And they're noticing people with 700 score ranges or 680 were actually behaving like people within the 500s or early 600s. And so they tweaked the score system a little bit and then adjusted it, and then people's scores adjusted a little bit. Remember this took place, you know, several months back. And now they finally figured it out. This is actually working to date. So we have that. Now, that's just a bunch of nerdy stuff. Facta Beacon is the one that's going to do the 30-day one. And then other scoring systems. Now these are brands, these are patents. FICO is a brand. It's not just a company. It's not just a logo. It's a brand because it's patented. No one else can use these algorithms in order to approve loans for certain types of credit instruments, products, mortgages, etc. Other than these guys own that legal document to say your score is going to be here. They own the secret formula. Remember in my other video we talked about the Hamiltonian credit system? Well, this is the byproduct of that. This is the pioneer of FICO was the Hamiltonian credit system. So this is what we have now. These are all patented and protected by the United States government. And this is what we have here. So Facta Beacon is going to do the 30-day one. Other banks, because there's federal and there's state lines, different state jurisdictions. Different banks operate differently and have different sets of rules. This ain't all set in stone, okay? This is not like, it's pretty much the best rule you can go by, but if you have relationships with banks, you get to know more about their lending protocols. Each bank has their customs. You know, it's just not customary for banks to do this. They'll let this slide here, whatever, as long as it's legal, it's fine. Because there's actually no law in TILA that applies to the inquiry for auto loans specifically. A little bit, but it's mostly due to these scoring modules. They determine that. They're allowing you to apply multiple times at different banks and it not hurt your score because they're the ones that are calculating your score. They're like the godheads. So in credit repair, there's multiple godheads, okay? You have TransUnion, you have Equifax, and you have Experian. These are the data houses. But this is just notes on paper. But these notes, it needs to make sense. They send it here for them to send them back. The real deal, okay? This is the product, okay? This is the raw material. This is the finished product. This is their business. They're selling you, they're selling the bureau's scores, and the bureaus sell to businesses, that's brick and mortar, BM, and then consumers, okay? C for consumers. They're making a lot of money doing this, all right? They're making a lot of money. So that's just kind of the logistics behind how this works. Now for credit cards is like the worst. Just focus on this, all right? 5 to 24. You can't have more than 5 inquiries within 24 months for credit cards. Why do I say this? Because this is what Chase, now Chase, JP Morgan is God, okay? Repeat after me, JP Morgan is God of credit. They have the best. They're the biggest bank, okay? They're the biggest, baddest bank out of all the banks. Aside from there's, you know, wannabe gods like Bank of America, one of the biggest banks of America, one of the biggest banks in America, Bank of America. You have Citi, okay? And then you have Amex. Amex is hurting right now. JP Morgan is the god of all. Now, to get the cards through JP Morgan, which are the best, any card from them, you need that 5 to 24 rule, meaning you can't have more than 5 inquiries on your credit report within 24 months. And as a rule of thumb, in the scoring algorithms of what we know as the classic scoring systems, and then these are the postmodern systems, okay, that came within the past, 15 years. Say like 10, 15 years around here, and these have been around for a long time, like 30 years, 20 something, more than that, okay? It depends. Yeah, on these scoring algorithms, where it says on the FICO formulas, there's formulas for each one of them. 35% is your credit history, is your payment history. 30% is your amounts owed. 16% is your credit length history. 10% is miscellaneous types of credit. 11 or 9% is going to be inquiries. It varies. It's a little different, right? These aren't the actual real figures. The real figures I'll leave right here. Boom. So we know inquiries play an important role. But if you apply multiple times for credit cards, this is a big risk. Why? Because this is unsecured. This is unsecured. Unsecured. Okay? Unsecured debt. It's the most riskiest business to be in. Meaning, if you have a credit card, you could default on it. Guess what? It's going to be much, much more harder for me as a bank to get money back from you unless I put it on a credit report, sue you. So, very difficult. This is why a lot of these right here, they end up as charge off or collections from these banks, and then you get kicked down to what's called the subprime, where these banks, they know your financial history, they know your habits, and they know how much money you can make off of you, and they're going to give you cards like Capital One. Capital One is subprime. Credit One. Credit One, okay? Those are subprime bottom feeder credit cards that, you know, are not good. There's other so-called credit repair experts that are spreading misinformation too. They're saying if you shouldn't close any credit cards, even if it's a bad credit card, like one of these subprime credit cards. That's not true, because you have to look at the bigger picture here. Yeah, you might have a credit card from Credit One Bank for 5 years and Capital One Bank for a few years. But if it's really not good and your credit limit is within this window, which I'm going to say here, 300 credit limit, $500 credit limit, or below 1,000, that ain't worth shit. Throw it out. You don't really need to work with them, okay? And if you're trying to rebuild your credit, you need to have other banks outside of the subprime sector. If you don't have any, then these ones don't really do you any good, because it's still on your report. You're a subprime borrower. I as a bank know, oh, you do bank with Credit One. It's like me as a friend. If I know you're hanging out with a street person and I'm white collar educated from Harvard, I'm like, well, you're from the ghetto. You know, listen to rap music. You smoke weed. You go and drink. You talk like a thug, right? And you carry a stick on you. You know what I mean? That's a street person. I'm not going to be associated with you, right? It's the same with the banks. It's basically like that. Right? Talk about discrimination. No, it's more or less calculation. Like, I'm not a dumbass. I know that you are a piece of shit and you're not going to pay my money back. Why am I going to give you money? Because you went on YouTube and you search how to remove this and remove that, and by the luck of your ass, you got it removed. So you think you just come back in the game? Bro or little girl, you don't know shit because you haven't changed your habits yet, which is why I sparingly help out people, because you know what? You could help people and they screw up on their own. They screw up. So you know what? It's doing more harm helping these people that are just going to harm themselves later on, right? When they're given a second chance, do the right thing. So I sparingly help people. Doesn't mean I judge people. It's just like, hey, man, plus these people are headaches to deal with anyway. That's my personal opinion. I'm neither right or wrong about it. It's how I conduct my business. These are the type of clients that I like to work with. These are the types of clients I don't. Simple as that. Now we got that out of the way. I think in this video, we've pretty much debunked this bullshitter right here. There's nothing more else to say. There's nothing more to say. Now, I just have one more thing to say. If this guy was wrong about this basic rule, what else do you think he's making up? There's a reason why all this stuff came off on TikTok. You can see it right here. It got removed. Misinformation, hate. It's just a bunch of nasty toxicity brewing from this individual. Notice my channel. It's all about arming you with real information and finding the right citations from the government, not just making stuff up. These aren't my interpretation. All of these lenders from these areas, auto loans, credit cards, mortgages. I have friends in the mortgage industry that do big business. I could drop some names if I feel like it, but I don't. I know credit card brokers. I know finance companies. I know mortgage lenders. They all know this stuff. Ask your mortgage loan officer. Ask a really good lawyer, a real estate lawyer, right? They know all this, the Truth in Lending Act. But these credit repair experts, notice there's no credentials. Actually, if you want to be a certified credit counselor, you need to know the Truth in Lending Act. And this guy, clearly, if you are trying to help people with credit, but you actually don't know this basic fundamental, it's like you trying to teach, college level English, but you don't even know your ABCs, bro. So he is disqualified. He's gone. You're kicked out. You're not qualified to talk about credit. You don't know anything. You're just a hillbilly that is a wannabe.